If you're not in the market or you wish that you were making more money trading, this episode's going to be for you. Tune in because this is going to be one of my favorite topics on earth. And when I'm not doing business or medicine, everything that I'm doing revolves around investing, making my money work for me. So on this episode, we hope to give you some massive pearls to help double your money every year, potentially even more. I've had some friends this past year turn $1 million into 9 figures investing. And if you're not in it right now, you're missing out on some huge gains. So for the next few minutes here, I'm going to be spending some time with a good friend of mine, Jeremy Newsom, who is a very active trader. He's got several free courses on trading. He teaches this for a living. He's an expert in stocks, money mindset, and cryptocurrency. And we're going to be diving deep into some strategies, hacks, and ways for you to make your money work for you. Without further ado, welcome, Jeremy. Welcome, brother. Thank you for spending some time with me. I'm super excited to have you on the show.
Dude, amped is an understatement. I am just jacked right now. I'm so thrilled to be here.
Honestly, me too. Any chance that I get to talk about probably one of my greatest passions of all time right now. I even say once I'm like done with the business entrepreneurial thing, I don't have to do that anymore. All I want to do is invest. I love this stuff. I live in it, and I can't wait to see where this takes me. I'm a rookie too. It's only been like a year or two. So how long have you been investing, brother?
Nice, man. I love it. I've been investing. Investing. But my first trade was an Apple in 1994.
Oh man, what a winner!
Yeah, that worked out okay. But I mean, really, about 12 years.
Awesome. So you've been in about 10 years longer than I have, and probably a lot longer than most people listening to the show. And you've probably also had kind of the wisdom of watching the market do all kinds of craziness. So, wow.
I have, yeah, both the crypto market and the stock market. And that was my first foray into investing was stocks, as a lot of people probably do. And what was cool about the whole crypto stock transition is crypto was an accident, man. I got paid money from a gentleman who lived in Israel in Bitcoin. He actually gave me Bitcoin back in 2014 as a payment for some one-on-one coaching that I had done for him. And I didn't know what it was. I thought it was super sketchy, never heard of it. He's like, dude, brother, I promise it's legit. So he sent me some money. I started doing some research on it. And that was right before it started 10Xing, right when it started popping. So that was at approximately $100 a coin, give or take. And that $100 turned into $1,000. I just cashed it out, right? I was in Coinbase at the time. It only had Bitcoin at that time, and sold it, cashed it out, linked it to my bank, and held the cash in my hand. And I just started doing the most deep dive that I could, listening to every person on the internet possible about Bitcoin, cryptocurrency specifically. But yeah, man, stocks has been my love, and it always will be. I tell everyone, if I'm a billionaire, I'm still trading stocks on a weekly basis at least.
Yeah, it's so fun. There's so many good companies out there too that you can follow and make those bets and really see them return in real time. Now, being in the crypto market for so long, man, I can't even imagine watching that thing evolve. I've been in it about 5 years, but really only 1 year, right? Like we all, I'm sure you as well. And at the beginning, you weren't all in on crypto. It's a very hard thing to, maybe you were, but I barely understood it. And it didn't have mass adoption. It was being used for, primarily sketchy transactions for the most part, at least as far as I knew. That's kind of what I used it for when I had, a half a Bitcoin sitting in my Binance account that I like, oh, there's money in there. I logged into my Binance this past year. I had half a Bitcoin sitting in there that I had never touched. It's a crazy thing. But yeah, stocks are a very interesting topic. I love following them. I bet on companies. I've got a whole different strategy for my long-term stuff. But for the listeners here, let's just take this step by step. I don't want to jumble all over the place. I know I'm already getting excited. So let's take a step back.
Totally.
There's a lot of different investing strategies out there depending on who's listening. If you're 80 and you're about to retire, one strategy is going to be for you. Whereas if you're like me and you're a little bit younger, a little bit higher risk, you've got money coming in, you've got money to lose, those are very different investing strategies. Am I right?
100%. Totally different. It does. It depends on, I would say, investing, and then there's trading. right? So active trading to create cash flow, because a lot of people do use the term investing. I think that's synonymous. People understand what investing is. But from my aspect, as much as I love investing and I do it and I have long-term investments, I also love trading to create cash flow. As easy as we can possibly make it, there's day trading, which everyone's probably pretty familiar with, and swing trading, which is generally you're going to be in a position for days, weeks, maybe months, sometimes a year or two, but usually less than a year. And you're buying Apple at 160, with 1,000 shares, and you're selling it at 170 with 1,000 shares, and you make $10,000. And you take that $10,000 of cash flow and you buy something with it, maybe a business, maybe mentorship, maybe a bunch of books, maybe a down payment on a rental property, maybe you're upgrading your kitchen, but you're using that cash flow to essentially enhance your life and create passivity so that you can have really essentially what everyone's after, I think, Jay, which is freedom of time, freedom of choices.
100%. And with this episode, I really want to speak to the younger investor, such as myself, such as you, who has that time, that really does want to do a little more actively, like you said, the swing trading, the day trading. That's what I kind of dabble with as well. So let's talk to that group here. Let's dive into swing trading, because that's the one that I like to pursue. I do that one as well, and there's pros and cons to it, right? And not every company should be swing traded, and there's pros and cons to holding versus doing that trade that you mentioned, mostly on taxes. Am I right?
Yep.
So
yeah, definitely. The
talk
taxes
to me about
are there. Taxes are there. So what I would tell anyone who's worried about the tax implications of active trading, that is a mindset piece. And I'll start to you with it this way. There's a book called Killing Sacred Cows by Garrick Gunderson. I think in chapter 2, like one of the first questions he asks is, would you rather pay taxes on $10 million of income or $1 million of income? It's like, there's no wrong answer. But which
there's
one
a wrong answer, I think, right?
No. He's like, it's just clear and dry. I would rather pay taxes on $10 million of income. How much are you going to pay is up to you. I've had many accountants tell me that you can avoid taxes and never pay them. It just depends on how hard you want to work and how much money you want to spend, right? With tax shelters and trusts and offshore accounts and living in different places and having different addresses, you can escape taxes if you really, really want to. But the easiest way to do it, my friend, the easiest way is to have failing businesses. One or more businesses that are not profitable. And so let's say Jay Feldman suddenly wants to create Feldman French fries, and you're just a terrible French fry salesman, man. So all the food that you buy, all the potatoes, all the oil, all the expenses that go into that, you can't sell fries for the life of you. But essentially, that tax implication of those taxes, right? If you have losses that you are harvesting in other companies, you can write those taxes off against your capital gains or against your income, especially if you're an LLC trader. And I've had many mentors tell me that every good entrepreneur should have at least one or two businesses that either is losing money or is hemorrhaging money.
Very interesting.
Yeah.
I've never heard that strategy before. I definitely want to dive a little bit deeper, maybe later on. I'm a big fan of strategic tax evasion, obviously, and doing it legally.
Yeah, of course. Absolutely, man.
So we can dive into that in a little bit. Now, for kind of the rookie investors in here, obviously you need to be in the market. Not being in the market's the biggest mistake. Starting off with people who are yet and a little bit skeptical to put their money in, where's a good place to start? Do you go straight into swing trading? Do you pick a couple companies? Do you pick index funds? Where do you typically recommend?
It's a great question, man. And I would normally say index funds. Yes, start there. That's the bare bones. It's hard, really, really hard to go wrong. A lot of people don't even know what an index fund is. I'm sure all of your listeners do, but for the 2 people out there who are listening who don't, an index fund can be as simple as the 3 Qs, QQQ, right? You go in and type in the letter QQQ into any Google or internet browser on earth, and you're going to get the NASDAQ ETF index fund that you can invest directly into. You can take $1, $10, $100, $1 million, and you can put it into the Qs on a daily, weekly, monthly, quarterly, or annual basis and just leave it alone. That's step one. Like, you should do that. If you don't want to do anything else, you are going to have extremely lucrative returns just buying the Qs on a repeating, consistent basis for the rest of your life. You'll dominate. Now, the second piece could be actively trade companies that you know, like, use, and understand. I'm going to name some companies that every single person listening probably uses on a frequent basis. Apple, Google, Facebook, Starbucks, Target, Lulu, Chipotle, right? You can actively trade these companies that you use, that you like, that you understand. You held their products, you've touched their products, you fully interacted with it consistently, and you'll be the first person to know if that product begins to suck or not.
That's a good point. Yeah, and I kind of believe in that too, right? I don't invest in stuff that I don't know or understand. Although I've been duped into investing into some strange companies out there by several stock pickers and things like that. We all have, right? But the biggest winners are the ones that I actively use in real life. My Apples, my Teslas, and those are about 30% of my whole stock portfolio. And they've been huge winners. It's the weird ones, the marijuana growing companies, the biotech companies that I had never heard of. Those are the ones that I'm holding big bags of poo. So for junior stock pickers out there, try and pick stuff that you're familiar with in real life. I think that's really good advice.
Yeah, totally, man. Now, can it be early in the game? Sure, right? Robinhood just came out. Traeger, the grills, that company just came out. DigitalOcean, that company just came out. Rackspace, Rocket Mortgage. There's a few other companies that just came out.
So many IPOs.
Tons and tons of IPOs that you can practice with and you can throw some money at. But if you're balancing an act, there is one way that you can do the IPO game is buy, and again, depends on your bankroll, but you can buy $100 of every single IPO at open. No question, no worries. This is a strategy that I have 3 of my clients do. When IPO hits the market, they buy a certain amount of it, and that's it. Worst case, if it goes to zero, they lose $100. Right? Which IPO has gone to zero in the last 3 years? The answer is none of them. They've had many that have gone down significantly. Blue Apron to name, Blue Apron, Robinhood, Snapchat, but they eventually recovered. So if it's a brand new company, it has the chances of growing exponentially. If you do the math, right, there's about somewhere between 200 and 300 new IPOs are going to hit the markets every single year, probably for the next 3 or 4 years. So just keep that in mind as you're budgeting the amount of money that you want to spend. I have a buddy, his name is Scott. He actually just texted me, which is cool. He does $1,000 into every IPO. And if it's a large cap, so this is an important piece. I know you understand this, Jay, very well. But there are a different blend of companies. You have like a mega cap company, mega cap. Cap stands for capitalization. How large is that company? So a mega cap is, you're talking billions and billions of dollars, right? That's Airbnb, right? When Airbnb went public, I mean, you're talking hundreds of billions at open, essentially. It's massive, massive company. So how large is that going to grow, right? Is a $10 billion company going to turn into a $50 billion company, or is a $100 billion company going to turn into a $500 billion company? The answer is yes, of course it could, but it's going to take a long time. Could a $100 million company turn into a $1 billion company, which is a 10X? Yes, that happens a lot more frequently. And you can spread out your diversification based on the capitalization of the size of the company as well, if you're doing this IPO strategy.
Interesting. Yeah, and I've kind of adopted that same strategy for cryptocurrency with microcaps, which we'll get into the fun, dirty stuff a little bit later. I really will.
Oh yeah,
keeping it clean and safe for people right now, or we'll slowly de-escalate into the dirty stuff. So hang in there.
I love it.
And a lot of this is mindset, right? A lot of people, especially new investors, it's an emotional game, and that's kind of the scariest part. Say you put $100 into an index fund, or not an index fund, like a tech stock that you like, and then you see your 100 go to 4, or you go to 20 more realistically, and the instinct is, especially recently, this has happened. It's craziness. The instinct for a lot of people is going to be to sell. They think their money's going to zero. They want to, as you say, paper hand and just hold on to whatever money is left. But historically, everything goes up, right? If you wait long enough, good companies, the stock market will eventually recover and go back up. So is there any kind of mental trick that you have to not paper hand or to diamond hand, as we like to call it?
Yeah, I do. The easiest trick for me is before you purchase that, write down with a pen and paper. Yep, the old school way, because it takes the brain waves and makes them reality. It's an old Bob Proctor trick. Take the pen, take a paper, and write down the plan for what you're trying to achieve with this investment. Write down time frame and your expectation on it. So if you write down, okay, I'm buying Tesla and I want to hold it for 3 years, you're going to write that naturally. And after you're in Tesla and you've been in for 4.5 months and it's gone up 35%, you can pull up that trading plan, that handwritten paper note to yourself in the future from your present self. And you'll go, okay, I got this. I'm looking at it right now. It's been a few months, not a few years. Let me just leave it alone and keep waiting. That has helped me in the past. Will it help everyone? Probably not, but it's helped me and it's helped a lot of my investors and my clients.
That is helpful. That's good advice. So moral of the story, I think, with this long-term trading for people who are new and you're not following this closely, is pick good companies, pick good index funds. Don't paper hand when things start to go down. And I think a golden rule that it's easier said than done is, right, buy down and sell up if you're going to do it. Like don't buy things when they're raging up. Wait for a nice little dip. The dips happen. If you've been following the stock market over the past 2 years, it's like a crazy wave.
It's been a roller coaster, man.
It's been a roller coaster.
It's been a roller coaster.
But
buy into weakness, sell into strength. And you're right. It does sound easier, but then you have the golden rule, right? Never invest money that you can't afford to lose. That's extremely important. If you do that, extra emotions will be attached to that decision and it can turn out relatively poorly. So let's say, you have an income of $60,000 a year and I don't know, you live on you're single. Don't borrow a bunch of money from your dad and invest that money or trade it or try to day trade it. Cause that's what I did, right? I was an idiot. And I learned the hard way that you pay for those emotions when you get other people's money and you start using other people's money. So shy away from that. Don't trade other people's money. Don't trade money you can't afford to lose. Don't take cash advances from your credit cards. Don't take payday advances. Don't be a moron. Get rich slowly. It's very easy to get rich. It's extremely simple. There's very, very basic steps to follow. It's a lot easier not to do it. Right, Jay? So it's very easy not to go to the gym on a weekly basis. It's very easy not to do push-ups. But if you want to get ripped, jacked, and have a great body, the math is simple. You do enough of these workouts over enough period of time, you're going to get the results. Plain and simple. Same thing with trading. Same thing with investing. Same thing with getting rich. It's just easier not to.
Yeah. And the trap, like you mentioned, and this is so important because I've seen so many people trade on margin, take out loans to trade, and then YOLO into something they don't fully understand because they're seeing people get rich online. And this is like the ultimate trap. And people lose their shirt on this. For all the people you see getting rich online, on Instagram, on YouTube, who are pumping up Dogecoin and Shiba Inu, there are 100 times more people losing their money on these things. So I genuinely agree with what you said. Be smart. Don't invest anything you're not willing to lose. Don't take out loans to invest. Don't trade on margin if you can avoid it. Margin is, you can explain margin probably better than I can.
Yeah. I mean, margin is legitimately borrowed money, man.
Yeah.
It is borrowed money. You're borrowing money against your own money. And there are absolute times when you can use margin, specifically day trading, but you need to know the math of risk. You have to understand the formula. There is a formula. It's a second grade math formula. It's not hard, but you need to know it because you can invest $100,000 and still lose $1,000. That's very doable, right? You can invest $1 million and lose $1,000. The investment size is irrelevant. It's the risk size, if you're wrong, that's the really, really important aspect. And I teach that for free, totally for free at my company, reallifetrading.com. You can go there. All the education's free. It's a bachelor's degree in stock trading, totally without any cost to you. But if you're talking about the risk portion, margin, easy way to break it down If you open an account with $20,000 on margin, you actually have $40,000 available for you to trade. So let's say you're like, wow, I'm rich. So you take $40,000 and you buy something and that thing starts going down 50%. Guess what? You're hosed, right? You almost lost all of your money because 50% of 40,000 is 20,000. So if you bought something, you just lost all of your money. It's gone and there's no recourse. And if it starts going too low, bro, you borrowed 20 grand. So they can come after your house. They can come after your car. It is legitimately not a spot you want to be in, is to get margin called with capital that you do not have. So yeah, I would highly suggest against that until you have spent years doing this and you have absolutely gotten at least a bachelor's degree, essentially the equivalent in stock trading.
Yep. And just to kind of further scare people away from trading on margin, like you said, they can come after your assets. And if you get margin called, you can't back that up. They'll liquidate your stocks at rock bottom prices. So waiting for them to come back up is not going to be a thing anymore. You're just out. So don't do this unless you're highly experienced. Okay. Yep. Enough of the scary stuff. Let's get into to some fun stuff here. And that's kind of where I like to trade. I've got my retirement with my financial advisor. He handles all of my long-term fun stuff, and my IRA. He's doing the index funds. He's doing the safe companies. And then in my Robinhood account, I have some fun. And this is where I kind of like to spend some time. And that's going to be on this swing trading, on trimming, on trying to time things. And I'll kind of let you take it away from there. People who are a little bit more experienced want to make some short-term gains. Where's a good place to start?
Well, the best place to start is we have to pick a really, really basic, super easy to understand strategy and use that strategy over and over and over and over and over again. I'm trying to figure out, should I share my screen or no?
I don't even know if you can on here. Is that possible?
I don't know. Let's find out.
Is there a share button?
I can't until I have to quit my application, so I won't do that. But no worries. So essentially, let's pretend, let's use a really easy strategy called the 10 EMA strategy. I'm going to use it in cryptos just to make it even easier. In the crypto trading, I use a 3-hour chart. The reason I use a 3-hour chart is because it's 24/7, right? It never turns off. It never sleeps. So a daily chart is a lot of data, right? That's like 2 or 3 days worth of stock market data in one day. So I'm trying to shrink it to get more information visually. And I use charting called candlestick charts. Candlesticks show the open, high, low, and close of a particular time frame. So if I'm using a 3-hour chart, I'm seeing the open, high, low, and close of a price action every single 3 hours. What I then do is I use one moving average. One. That moving average is the 10 exponential moving average. Once I have the 10 exponential moving average, my strategy in crypto and on a lot of other stocks as well is this. I wait for a bearish candle, which is a candle that closes lower than it opens. I wait for that to close above the 10 exponential moving average. And just to give everyone like an example, this strategy did play out on, there's a trade that I'm a huge fan of, a coin that I really like, and a project I'm a big believer in is Cosmos, which is Atom, ATOM And on Cosmos, back on December 29th, so if your listeners are in front of computers, you can go back in time to December 29th at 1800, so at 6 o'clock Eastern, and you'll see the bear candle closing above the 10 EMA on the 3-hour chart. Your entry would have been $28.10, Jay, and your stop loss, which is like, get me out of here, is $26.10. So the difference of $28.10 and $26.10 is $2. If you said to yourself, all right, my risk is $3,000, I'm perfectly happy and comfortable losing $3,000. If I lose $3,000, no big deal, no worries, I'm all fine. You would have had to buy, and you could have bought 1,500 Cosmos. And your investment would have been large and in charge. So we're talking approximately, I'm doing this math in my head, $42,000 US. So you would have invested $42,000, but worst case, if it didn't work, you lose $3. And what would have happened is Cosmos never broke the 10 EMA until 40 5 days later. 5 days later, Cosmos went from 28 to 40. That's bananas. So if you're talking a $3,000 risk unit, right, investing 42 grand, you would have made approximately 12 risk units on that trade, which would have been, 12 times 3 is 36. You would have made 36 grand. That's an amazing, amazing win, which is very possible, very achievable. And that's kind of strategy that I play, both up and down.
Interesting. And this is something that you can learn and replicate using rules and math.
Yeah.
So this is
precisely, man,
kind of my next step. This is stuff that I really want to get into, but this is what you would consider day trading, right? Watching these candlesticks, making the right move at the right time based on really just sentiment, like which direction it's going, not really trading on news, but trading on volume, visual and sentiment.
Yeah, exactly. So day trading and swing trading, the main distinction is the time frame that you're looking at. So when I mentioned a 3-hour chart on Cosmos, so it could take 9 hours to get 3 candles. Like that's a whole day. So you don't have to be in front of the computer. You can set alerts, you can set indicators, you can set things to set up that give you or tell you or show you when everything is playing out. Day trading essentially is what I did today. I'll walk everyone through an example that I trade on Apple. This was a real trade that I did today on Apple. I'm just going to give you the numeric example. So there was a bear candle closed above the 10 EMA today at 8:54 my time, which is 8:54 Central. I live in Nashville, Tennessee. And I bought 4,000 shares at $176.31.
Big trade.
Right, 176. No, this is a 5-minute chart. Sorry, a 3-minute chart, Jay. So when you're talking about day trading, right, this is 3 minutes. So every 3 minutes, I'm getting new candles, new information. 4,000 shares, $176 per share. And I sold them at $177.11. So I only made 80 cents on this trade, but I made 80 cents on 4,000 shares. And that whole trade took 8:54, took 11 minutes. So I made approximately $3,800 in 11 minutes in one day on day trade on Apple. And that was classic day trade. No news, didn't care. I'm looking at a pattern. And in my opinion, learning to actively trade the liquid markets is one of the top 5 best strategies anyone on planet Earth can master. Because if you master it, you can do it from anywhere in the world at any time with internet, no phone calls, no emails, no customers, no refunds, no landing pages, no sales scripts, no nothing. It's you and the computer. And all you have to do is memorize patterns, get really good at the sentiment, just practice this for a few years, and you can have a skill that's used forever to create cash flow. And it's amazing.
That is amazing. So it's like printing money. It's crazy. Now, obviously, with how long you've been doing it, the pattern recognition has become ingrained.
Yeah.
How long did that take? It sounds easy when you're talking about it. It sounds like a dream come true. But I also know a lot of day traders who struggle and have lost a lot of money. So is there a period where you were wrong a lot and maybe made some mistakes before getting to a point where you were able to consistently make money?
Dude, I sucked hardcore for the first 4 years. Now, it wasn't mostly because of day trading. It was just, I was an idiot, man. I started really, really actively trading with other people's money at the age of 21. I did everything that you shouldn't do. And when people say like you made mistakes, I did every mistake known to man. I did them all. So I'm aware of what not to do. And I teach people, like you mentioned, what not to do. How long did it really, really take me? 7 months. Every single day for 7 hours, I would practice. There's something in trading called back trading. What you can do, Jay, is you can go back in time and you go candle by candle, minute by minute, hour by hour, and you can literally burn these patterns into your brain. And if you do that and you spend time, right? Let's say 7 hours for 7 months. That's one way you can do it. You can do 2 hours a day for 2 years. You could do an hour a day for 4 years. Yes, it's going to take time, man. Essentially, about as long as it's going to take to get a master's degree or a bachelor's degree or associate's degree in college, you're going to have to spend some time. But once you get this down,
printing money
will never go away.
Unbelievable.
Yeah.
Man, something really to think about, something I would love to learn. I know my ex-girlfriend's dad, man, sold her company and now just sits upstairs surrounded by monitors and has turned their small fortune into a huge fortune doing this. And
That's so cool.
It's so cool. And I've talked to a lot of people who have had so much success with this at a computer. And it's nutty to think about that this exists, it's out there, and so that you can master. Let's dive a little bit into the middle of what we just discussed, right? There's long-term safe trading for people who are newer, older, just want to be in the market, but don't want to actively participate every single day. And then there's day trading. This is your job. You're at a computer. You're watching this like a hawk. You're making daily decisions. I swing trade. So let's spend a little bit of time explaining swing trading and some strategic ways on how to do it.
Yeah, man, totally. So swing trading, that's like you mentioned, the middle child. That's when you're doing days to weeks. It's a lot less work, and there's so many amazing strategies you can use with swing trading, especially if you know options. So I'm sure everyone listening knows this, but not only can you rent out your stock, just like you can rent out a house, but you can also buy insurance on your stock, just like you can buy insurance on a house. And if you buy a house for $150,000 and you rent it out monthly and you have insurance to protect your downside, you can create a cash flowing asset, or at least an asset that will pay you into the future. You can do the exact same thing with a stock, right? You can put in $150,000, rent it out, use that rent money to buy the insurance contract, and you can have ready for this one, a mathematically unlosable trade for a certain period of time. That can happen. It's very, very doable. It happens all the time. And that is swing trading. So swing trading is understanding the tools and the capabilities that you need to be able to use the right approaches that are available to you and just do it over longer periods of time. So it allows you to have a full-time job, right? I have children, as probably a lot of your listeners may. I have a wife. I have obligations. I have many other businesses. I'm an entrepreneur just like yourself. Obviously, you're a male model. I've never made money from male modeling, but you are allowed to have side hustles and other streams of income. That's great. Swing trading allows for that. It's a lot less stressful, and I love it. But the downside is when it's bad, it's really bad. When the market's super choppy, when you're trying to get in and like get out and get in and get out over a course of a week, and if it's just going up and down, up and down, up and down and stopping everyone out, it can kind of suck. Swing trading works really, really well in trending markets, which we are having right now. But eventually we're going to trend sideways for a while. We're going to rest, and that's going to be pretty choppy for swing traders, and it's going to be amazing for day traders. I generally say it's okay to have both, because in day trading, man, yes, you can watch stuff like a hawk, but not forever, right? Once you get into a trade, you can set up what's called a bracket order, have a stop loss, have a target, and walk away from the computer. And it's going to do its thing, and you can come back 3-4 hours later after do a bunch of push-ups and take a nap and read a book. You can come back and check on your trade that day.
That's an important conversation too, right? These stop losses and these sell orders, to be able to, one, mitigate your losses, right? If something is crashing, you want to be able to stop that before it goes all the way down. And then same thing with selling. I think people have a really hard time pulling the sell trigger.
They do.
And it's something
they do, man.
For all the mistakes you said you've made when you started, I learned a lot over these past 2 years. When to pull the sell trigger is one that I'm still learning, and I think is something that is relatively hard to master. So let's talk a little bit about those different orders that you can put in.
Oh man, tons and tons. So without getting too complex, there's 3 main orders that all brokers use: Robinhood, Interactive Brokers, TD Ameritrade, Charles Schwab, Fidelity, blah, blah, blah.
What do you use?
You have a stop. What's that?
What do you use to trade?
Great question. So I use Thinkorswim, which is my main trading platform, and I also use Interactive Brokers, which is like my longer term platforms. I don't give anyone else my money. I manage all my money myself because I figure I'm the only one who's going to manage it the best. But yeah, Interactive Brokers and TD Ameritrade, which owns Thinkorswim. Even though TD Ameritrade got bought out by Charles Schwab for like $42 billion last year, that merger will happen, in a few years. Anyway, I use 2 or 3 different brokers. But But I do understand Robinhood very well. There are 3 broker orders that most platforms have. Market, which everyone knows, you're in, out immediately. You're going to pay the worst price and you're selling at the worst price. If you use a market, you're generally an idiot. All right. Next, you have a limit order.
I just raised my hand.
So,
I'm an idiot.
Hey, it's all good, dude. It's all good. A limit order allows you to dictate where you buy or where you sell. XYZ stock is trading at 10 and you want to buy it at 9. You set a limit order that says, all right, get me in at 9. So you don't have to do anything until it goes to 9, then you buy. If it doesn't go to 9, you don't buy at all. You keep waiting. Secondly, let's say that same exact stock, you bought it at 9. Once you do that, you can create a limit sell order. So still a limit order, but instead of buying it, you're selling it. This is easy. You bought it at 9. You say, all right, I want to be like my boy Jay. I want to make 100% on everything that I own. So I'm going to sell it at 18. So you buy at 9, you do a limit sell at 18, and you walk away for 7 or 8 months. And it goes up to 18. While you're asleep, boom, fills, and you sell at 18 and made 100% return.
That's that bracket order that you were talking about, right? You set the lower limit, you set the upper limit, you forget about it, you take emotion out of the equation, which I think is super important.
Precisely. And then you have a stop order, man. And a stop order, right, allows you to go, all right, I bought XYZ stock at 9. If it goes to 6, get me out, man. If it goes to 6, it could go to 5, 4, 3, 2, 1. Yeah. I've seen it. A lot of people go, nah, that's a good company. It's going to bounce. It's like, dude, why don't you just get out at 6 and rebuy it at 3 if you think it's a great company, right? It can go lower. Just like stocks can go higher, they can go lower. So I use stops very frequently to protect myself, especially in the day trade, always in the day trade, forever. I will have what's called a stop loss order. So it allows you to set, like you mentioned, Jay, hey, get me out. Exit the trade, take my loss, move on. But you can create those bracket orders, which really takes emotion out of it, and you can become semi-robotic in your approach.
Love that. Super important thing to master. Definitely something worth taking a course on for those that don't know how to use those. Would love to kind of transition and talk a little bit about market trends, not only with the stock market, but cryptocurrency. Obviously, and depending on when you're listening to this, we're recording on January 12th, 2022 right now. There's the inflation concerns, the Fed, there's all kinds of factors driving things a little bit nutty. Cryptocurrency as well. So I'd love to ask your input on what we're looking at 2022. What do you think the next year is going to be like? And how can we win over this next year?
That's a good question, man. I mean, my opinion is generally more of a macroeconomic view, and I could be wrong, but here's my opinion. A lot of individuals are getting rich, and they're getting rich because they're having to stay at their house. They're traveling less, they're flying less, they're eating out less, and they're still working, but they're not driving their car. They're not spending money on fuel. They're not eating out as much. So they're saving money, and a vast majority of humans, at least in America, are taking that money and they are investing it. They bought Dogecoin or Shiba Coin, or they got lucky with Bitcoin or whatever. They're buying cryptos or they're buying stocks. But the really crazy part is they're probably profitable since they bought it. So they made more money. They're flush with cash. They're not going anywhere. They're scared. They're worried. They're upset. They're taking all this stored cash and they're buying assets with it. Houses, cars. Like cars are generally not an asset, but right now they kind of are. Watches, boats, RVs, literally anything is going up in value right now, which is nuts. So my thought is we will have probably at some point this year a 10 to 15% pullback drop in the market. And that's going to be a very good buying opportunity. And we're going to go higher. We're going to go higher on just about everything. Cryptos, certain cryptos will go higher. The big broader market boys like Bitcoin, Ethereum, Litecoin, they're probably going to trade sideways and chop around in a range for a while, which is a really good opportunity for swing traders. So for example, Bitcoin could go from 40 to 50, back to 40, back to 60, back to 40, back to 50. It can do that for the rest of the year. And I think it will. There's a lot of hype right now. Everyone's yield farming. Everyone knows about Pancake Swap. Everyone knows about NFTs. Everyone's doing everything, every time, everywhere you go. That's generally not the best news, right? Because we want to be early. You don't want to be in something that every single human being on earth is talking about. So my opinion We're going to chop around for a while, but yes, we will eventually go higher in the crypto market with Bitcoin, Ethereum, Litecoin, and a lot of different altcoins are going to do whatever they're going to do. If you catch the right one, congratulations, kind of thing. But dude, the challenge is there's a lot of people that are rich right now. They're richer than ever. And it's because the assets they've purchased have gone up in value. And again, they're spending less money. So when this whole mask, vaccine, COVID issue kind of goes away a little bit and gets swept under the rug and we start forgetting about it as a nation and as a planet, I think it's going to be the roaring 20s all over again. Just my opinion. I've been saying it for a long time, though. I called COVID the equivalent of the 1987 crash in the U.S. markets when the markets dropped 45% in days. I think the exact same thing happened during COVID. And when that happens, you had a huge, huge rush higher in the markets. Secondly, in the 1920s, you had the Spanish flu. You had other pandemics that were happening. And when that got over, you had, boom, the roaring 20s. 100 years later, that's where I think we're at. So personally, I think we're good, man, for the next 4 or 5 years. I think we'll have some pullbacks, we'll have some dips, but I don't think we're at the top yet. And I'm really excited to ride this wave.
I am too. I think now's a great time to be investing, especially a lot of these tech stocks that have been hammered over the past, 2021 was not a good year for tech stocks, the Cathie Wood ARK stuff. So I've been kind of doubling down on those and crossing my fingers, but also cryptocurrency, man, we're so early and it's so exciting. And if you know how to identify these patterns and get in at the right time and take some profits on the way up, so much opportunity there. One question before we go into some stock picks and crypto picks, where do you swing trade your crypto? Because I know you're paying fees on all of the trades on most of the exchanges, but maybe Robinhood, do they not have fees? What do you do there?
Good question. So Robinhood is not really an exchange. You have only a certain amount of coins that you can buy on Robinhood, but you have no what's called native wallet. You can't send a crypto from Robinhood to your friend or your buddy. There's no wallet right now, at least. I'm not saying there won't be, but right now, you're just buying digital paper.
Yeah.
I mean, literally, you're buying an IOU with Robinhood. And there's nothing bad about that, but yeah, you don't really charge much fees and you get what you pay for, right? So secondly, for me, to answer your question, I trade with Kraken and I trade with Coinbase Pro. I do have a Gemini account. I do have a Binance account. I have a few other accounts, more or less to understand what a lot of my clients, what they use, because I do have an international brand and I work with individuals all across the globe. So they might use Binance, like if they're in Australia or Indonesia, India, whatever. They might use Gemini. They might use Kraken. I need to be kind of comfortable and familiar with all the platforms. But yeah, man, Coinbase Pro, I probably make, without exaggeration, 100 to 200 trades a year in Coinbase Pro. With Kraken, I probably do 50 to 70. And yeah, I don't trade massively actively. And Coinbase, I treat Coinbase, the actual native platform, the original platform, as the savings account. So I take income that I make from my normal day-to-day life, normal day-to-day work, whatever. I use that as my savings account. I've been doing that since Coinbase literally was created. When it first came out, I started using it as a savings account, buying Bitcoin. And then once Bitcoin was not only the only thing on the platform, Ethereum, and then Litecoin. So I did it on all three early on. And it worked out really well. So I continue to do that. So I'm still buying it. I'm still buying coins on weekly, daily, and monthly recurring purchases in Coinbase. The coins that I'm purchasing are Cosmos, Matic, Polkadot. I'm buying those on a weekly basis, along with Uniswap and Ethereum. I'm also buying Ethereum on a monthly basis and a daily basis. And I even buy Shiba on a monthly basis. Only $100 a month. I figured I do like to gamble. Why not?
I have some
just
Shiba
in
too.
case something
Guilty as
just
charged.
in case it burns to zero. I want to say, I helped burn zeros. Who knows? It's probably nothing going to happen with that. But long story short, man, I treat Coinbase like a savings account. That's like a long-term crypto play. I trade actively in Coinbase Pro, and I do really, really well. On average, for about the last 5 to 6 years, I've done somewhere between 200 and 300% a year, every year in that account.
Yeah, I believe that. And for a lot of the people listening, the fact that you're using it as a savings account, instead of an actual savings account, pouring your money into something that you know is probably going to go up over time. And you're also, are you earning interest, APY staking?
Yep.
Yeah. Mm-hmm. So staking is huge. I trade on Voyager. I kind of do the same thing with my Bitcoin and Ethereum, and I'm earning about 5% on average there, which is way better than a cash savings account right now.
It's amazing.
Amazing. And those things are going to go up in value over time. So not only is my dollar getting bigger, but I'm earning interest on that. So definitely something for people to consider. And thank you for the crypto picks. I was going to ask you next. I'd also love to get some stock picks from you.
Yeah, totally, man. So with crypto, I think we all know kind of like hey, let's keep an eye on this one. They're all good. Who knows? There's gonna be a random thing that no one's ever heard of that's gonna go up 1,000% next year, I'm sure. For stocks, there are a lot that I like. Upwork is one that I'm keeping a very close eye on. UPWK.
I own that.
So yep. Upwork, it's at 30. I do think it's going to go a little bit lower. Present day, it's around 30. If it gets down to 16, which I know sounds like a dramatic fall from where it is, and it is, I'll start buying some because I do use it. I understand exactly how they make money. I don't really think that their platform is going to go away. Same with Fiverr, right? Fiverr International and Upwork. I think we're in a gig economy. I think a lot of people use it. I think a lot of people understand it, but both of those stocks had way, way too large of a bullish move in 2020, and they just really need to calm down and wait. I still like those. I don't have any positions in them right now, and I'm waiting. The stocks that I do have positions in at this exact moment in time that I'm pretty bullish on, PayPal. I'm buying PayPal. Alibaba, right? I know there's a lot of issues right now with China, but Alibaba is down a dramatic 70%.
It just keeps going.
They still make.
I'm holding a big bag of poop on Alibaba. It keeps going down. But yeah, it's a great company. I own Alibaba.
Yeah, a lot of people are bag holding on that one, but Charlie Munger just bought 400,000 shares, which is, wow. I mean, as an accident. He accidentally bought 400,000 shares. Like it's so tiny for him. Yeah, Baba's down 64%, and they still make billions with an L. It's a very, very powerful company. I think that they're going to recover. I do own some shares of Alibaba. Square, I'm accumulating some shares of Square. I think it's going to also go higher over time. And then NVIDIA and Tesla. Huge Tesla fan. I'm a Tesla fanboy. I've been a Tesla fanboy for a very long time. I accumulate relatively large shares of Tesla if I can. And I know you mentioned that Tesla and Apple about 30% of your portfolio. So you're awesome. And I'm expecting Tesla to continue to go higher, man. I really do. Especially when they come out with the truck. Semi.
The truck.
Oh my God.
The solar. There's rumors of a Tesla phone. I think Tesla's taking over. Apple as well. Apple keeps innovating and crushing. But I'm glad to hear that I own every stock that you mentioned. I'll call that a big win for me. Also, I mean, lastly, because you mentioned about 10 stocks, I own about 40 stocks. I know this is probably the wrong thing to do. What is your sentiment there? Own a few great companies that you know and love, or diversify and hedge your risk? What do you think?
It's a great question, man. There is no real definitive answer to that because Warren Buffett does the first approach. He takes he has 16 stocks in his Berkshire Hathaway portfolio. 16, and they're all boring as crap.
Yeah.
Apple's the biggest holding, Coke, JP Morgan Chase, McDonald's. I can't name all of them off the top of my head, but he has he has 16, right? That's it.
Yeah.
That's nothing. But then you have T-Bone Pickens, who died not that long ago, rest in peace. And T-Bone, I mean, that guy had 12,000. Just a little bit of this, a little bit of this, a little bit of, he had a little bit of everything. And that also worked for him, right? One of the best stock pickers of all time. There's no real right answer. For me, it's just about brain space and how much time you have on your hands and how much you like researching new companies, because you'll definitely be in ones that blow up if you earn enough. But again, be creative with what you're in. I will say that as an answer. Be creative. Don't have all tech, right? Sit down for an hour a month and ask yourself, what do I buy? Sherwin-Williams, right? You probably use Sherwin-Williams paint if you have a house or you do rental properties. Scott's Miracle-Gro. A lot of people ask me hey, man, what's your pick on weed? Which weed stock should I buy? And I was like, Scott Miracle-Gro. They're like, you're the smartest person in the world. And I was like, thank you. So, because Scott's Miracle-Gro, I mean, they're absolutely crushing it. They're dominating, and they're down right now about 30% from where they were. So I think Scott's Miracle-Gro is a good buy. but be creative, right? Don't only be in tech. Find other companies that you do use and interact with and still trade those, because there's tons and tons of them available, and a lot of them do really, really well.
Great advice. And one thing I learned this year is think for yourself, do your own research. If you trust stock pickers and YouTube videos, you're going to end up buying at the top, buying into a bunch of hype. The best picks that I've had have been literally stocks that I had hand selected and done my own research on. So the better you get, the better you'll get at doing that yourself.
There you go.
And
bro.
if you want to
Love
get
it.
better, you want to learn more, you go to Real Life Trading, you take some of these free courses that Jeremy's put together. But on a real, I'd love to talk just for a second about that. Like, what kind of courses do you offer, and how much do they cost, and who are they for?
Good question, man. So I'll answer who they're for. Who are they for first? These courses are for anyone who is generally if you listen to this podcast, it's for you. I mean, because you're always talking, Jay, about business, investing, and money, and the mindset of money, and growth, and just becoming a better person in general. And if you are in this mindset, if you listen to podcasts, you should invest. So it's a very, very large scope. The classes, 99% of the classes are entirely free, right? They're not valueless. They are priceless. So go and educate yourself, get your degrees. I have certificates of completion, all that kind of fun stuff. If you go through the programs, there's no sales pitch at all. I'm very open. I say, guys, I make a lot of money trading. I give this away for free because I want people to truly understand this. I went to school, University of Florida, go Gators, to get a finance degree. They didn't teach me anything about the stock market, day trading, options, or active trading, Jay. So I changed from a business management degree and then self-studied from 18 till 22. So go and learn all this education. If you want to sign up for a little bit more of an advanced program where I teach really advanced option strategies, and I have a day trading stream that I do on a daily basis where people can watch me day trade. There's a ways that the company makes money for sure, right? I'm a very good businessman, but essentially if you have any, and I mean any interest in this stuff, at least take the beginner's course and let me blow your mind.
I'm about to take some of these courses myself, specifically on the day trading and options. So thank you, Jeremy, for offering that. And thank you for doing that for free. That's how you know this guy is actually doing well trading. You don't want to take courses from somebody who's begging for your $300. You want to take courses from people who don't need it. So that's beautiful. Thank you. For those looking to enroll in those courses, I'll link that in the show notes. And Jeremy, where's the best place for people to find you if they want to follow your actions, follow what you're doing? Where can they reach you?
Appreciate it, man. I'm very similar to you. I'm all over social media. So if they search Jeremy Newsome, jeremynewsome.com. I have a YouTube channel, Real Life Trading. I have a YouTube channel, Instagram. So all the social media stuff. Just remember, my name is with 2 R's. My dad's name was Jerry. Stands for Jerry and me, Jeremy. So, yeah, man, that's essentially it. If you track me down, I'll be around. I'm very active on social media, especially Twitter. So if you have a question, you send me a message. There's a 99% chance I'll get back to you.
Love that. And let him know that you found him on this show. And I apologize to the listeners for going slightly above my normal show time, but investing gets me excited. This was a lot of fun. I learned a lot. I know you did too. And Jeremy, thank you, brother, for hanging in there with me for an hour, spending this time with me, spending this time with the audience, giving back a little bit, helping people make more money and change their lives. Thank you, brother.
My pleasure, brother. You're the man.
All right. We'll see you on the next episode, everybody. I hope you enjoyed this one.